Hello and welcome to this week's very special episode of Homescreen. This is the Christmas edition of the show. We've brought to you throughout the year, through thick and thin, every week. We've been talking to people from throughout the industry about how they're building products, how they're kind of adapting to life in the new world, and so on. I'm Jim Safford. I'm a product lead here at 11FS, and I'm joined by Joe Colchester, who's product manager. Hey Joe, how are you doing?
Very well, thanks, Jim.
This week, we're going to be kind of doing a little quick rundown of the year for you. So what was happening in the first half of the year? What were the key themes of the second half of the year? And very quickly, what we think is going to happen next year. Joe, you're currently in London, but will you be heading back to, I imagine, back to Wales for Christmas?
Yep, I'll be heading back to Wales. Although I spent so long there that I'm quite enjoying the kind of festive period here in London at the moment. Is that really the best shirt you could do for Christmas?
It's have you ever heard of that song Christmas Island?
Oh, that's the link. That's the link.
Yeah, it's kind of like Hawaiian themed. So I thought I'd in the absence of any Christmas jumper this year, I've decided to pop on the older Hawaiian shirt. Well, can you talk me through your number? You've got a nice little looks quite thatched actually. Looks quite knitted.
It's itchy, and I'm sweating in it. But it does the job.
Have you got any Santa on there? Any kind of imagery on there?
Well, it's just red and black, so I think it ticks those boxes.
Fair play. Cool. So the first half of the year was really interesting because it was dominated, as we all know, by one major event. And we were going to talk to you, I think, in the first instance, about kind of what happened in response to coronavirus and the virus, what that did to small businesses around the world, and kind of how countries can responded in terms of keeping those businesses alive.
So Jim, do you want to just tell us what the UK and US response was to that then?
Yeah, so I think important with our UK heads on to talk about the UK response, because it was quite a simple strategic kind of approach to kind of rolling money out. The UK introduced a range of different financial products, spearheaded mainly by a loan called the Bounce Back loan, which the government kind of issued an 80% protection over. So this was kind of essentially a government guarantee of 80% of that fee that was being lent out should a consumer fail to pay that back. But the problem was that only a select few groups of banks were able to issue these loans. And traditionally, those banks have had the highest problem with distribution. So for example, there was talk throughout the year about there being terrible phone line queues for business owners trying to get through to the main five kind of issuers of these loans. The banks not having the infrastructure and the technology to be able to process all of these and triage them accordingly. And then only kind of a little bit too late did the UK Treasury actually introduce the same offering for companies like Tide and Nutmeg and others, Funding Circle, who were able to then bring their kind of like tech first approach to the problem and really quickly distribute these loans. The US case was quite interesting because it took on kind of two main approaches. The first was like a stimulus check led organization whereby every single member of the US citizenry was given a check for $1,000 just off the bat. So they could go, they could receive, dependent on kind of which bank they were with, they'd receive it at different points. But there was also, in the same way that the UK had our bounce back loan provisioning, there was also this package called CARES, which was super interesting.
So do you just give us a bit more detail about that CARES deal then, that CARES package as they called it?
The US had a really interesting financial package available called the Economic Injury Disaster Loan Package. And what that did essentially when a member of State Department deemed it necessary, they were, and when they deemed a situation to be worthy of what they would call a legal allocation of disaster, then that would mean that these economic injury loans, which kind of were able to provide huge amounts of liquidity and support into the US, were able to be distributed. So that was the first port of call. It was infrastructure that they already had, but their kind of rollout of 2 trillion of domestic support just wasn't enough. So what ended up happening was the US Senate and Congress passed a new act called CARES. And what this did was it kind of added a little bit of meat onto the bones of this project, which was this economic injury disaster loans package, by pumping extra liquidity into the market. So CARES added an extra 10 billion onto the IDL's package and 350 billion for paycheck protection loans. So these were kind of what you'd see in terms of companies, individual companies being able to guarantee paychecks even when they didn't think they'd be able to do so. So 2 very distinct packages which could help very distinct use cases.
Yeah.
Companies were kind of able to do really interesting stuff like claim their advance checks, that kind of $1,000 check in advance. We saw an example of that with Chime early in the year. They had a feature called Spot Me, which allowed you to kind of claim that check before your bank could kind of get that forward, and then they'd recoup the check afterwards. So that was really a really interesting use of the legislation. And then there were also these kind of, the US's approach was really different in the sense of, while the UK only had sort of these 5 lenders who were doing the majority of the lending, the American banks were doing it on a far more kind of local or regionalized basis. So there was 5,000 lenders, 2,000 lenders who were kind of able to distribute these payment protection packages, these loans via their banks. And these were tended to be like community banks, and then the major banks and stuff like that.
For sure.
And then just to follow up on that, then they had this really interesting situation whereby if a business was able to sort of keep operating and used a substantial chunk of those funds to keep the operations going, then they'd be forgiven that loan.
Yeah. And actually, we're just going to take a quick look at how that looks within Kabbage. So we're just going to take a quick look at that now, kind of real life example. So in this journey, a Kabbage user is awaiting a decision on a payment forgiveness for their PPP loan, as Jim mentioned. So we see an overview of the documentation, balances and tools, as well as the kind of need help, the constant linking out to where they might require some further assistance on this. So it's kind of relying on fintechs who are much more familiar with quickly releasing features and offering that good UX and support. So we can just see how quickly it's been laid out here. Not much to speak of in terms of UX, but kind of certainly ticking basics and very easy to navigate.
So that kind of dominated the first half of the year. And I think the big challenge for most businesses was, if you're a lender, how quickly can I get these funds to these companies and make sure that they're able to stay afloat? Like, that was the big national agenda, and it was an international one as well. So like every single type of business was working towards this particular problem. So you'd have things like creditworthiness assessed, the ability to move large chunks of money. All of these different things were brought to the fore. The second kind of version of the second half of the year was particularly interesting, we think, from a banking as a service perspective. Our company talks a lot about this in terms of its own media properties and all of the research that's been going on. But Joe, could you just summarize what happened in the second half of the year that was so unique about the banking as a service industry?
Yeah, sure. I think something that really brought a lot more attention to it than otherwise would be before was the collapse of Wirecard. So Wirecard was a payment processing financial services company, banking as a service industry within there. And lots of companies like Curve and Pocket were relying on them for their banking license, their payment processing capabilities, as well as a lot of other things. And thanks to a very good investigation by the Financial Times, very consistent in that, they exposed them for fraud, something that the regulators hadn't called them out on. And this caused a lot of chaos, just picking out those UK fintechs I mentioned, things like 𝗛𝗃𝗃 and Curve. suddenly those users saw their payments being frozen, their accounts suspended, and things like that. And it really called into question, hang on, who are these third parties that we're relying on? How are they so important? And do we really need them? And the answer to the third one is yes, we really do need them, because they speed up processes, they lower the headcounts, and they make for a more kind of efficient, faster to market product. But I think what it did is it really kind of called into question banking as a service as a whole. And I think there was a reaction to it. There was a reaction in that people, different companies started to rely on banking as a service just as much, but they started to kind of go for more niche and independent ones where they weren't just covering all the bases like 𝗪𝗪𝗲𝗲𝗲𝗲. So one we're going to take a look at is Galileo. They're great for card issuing and payment processing. And then there would be stuff like 𝗪𝗪𝗲𝗀𝗲𝗲𝗲 for anti-money laundering. So I think it called into question the whole thing, but it didn't necessarily mean that the banking as a service was abandoned. It actually had the result of it just being more of a focal point.
I think there's a final point to add on that, which is that banking as a service in the days of like Wirecard was a very sort of simple, out of the box standard procedure whereby you had one set of card issuance instructions, you had one set of like sort of payment rails and payment infrastructure. And then as the fintechs that were using these services have started to mature and to grow, then they've realized they need more bespoke offerings. Would you say that's true kind of, and how the new generation of banking as a service providers are sort of like offering stuff out?
Yeah, it's getting more and more particular to the stack that's offered. And it depends. Some people would prefer to take it in, but that does take a lot of money and time to get it sorted out. But yeah, I would for sure say it's getting more and more particular to these kind of individual services that they can then refine and get better and better at, which we've seen a lot of recently.
Yeah, and I think the final point on that is that, you know, for example, there tends to be two ways of operating. You see, like with what we're about to see, Galileo have two main products. One is an entry-level kind of standard offering in their Galileo Instant product for companies just starting out with card issuing. And then once you get up to higher transaction volumes and higher numbers of users, then they'll move you onto a more bespoke API-based package. So the ability to kind of like very quickly figure out what you need and then move you on to those new solutions. So into this products page, this is the kind of the first instance where we can see what all the different tabs do. API keys are available for your developers. And in this products page, we can actually click on a little card-shaped icon to generate our new card. Black and white are the two options. We click next, and we can also add our little logo. Our CEO is going to absolutely love this, by the way, so you've done us a real favor here. I'm going to show it to him. And then we'll be able to see the 11FS branded card, and clicking next, we can add a little name for that as well. So you can see it's a MasterCard. It's got the kind of that kind of very trendy vertical thing that all the banks seem to love. And then this kind of lovely delight kind of moment where all the confetti comes out.
So what's going on with Stripe Treasury then, Jim?
So this was a really interesting moment where I think a lot of people were thinking that that Stripe were coming into the banking as a service kind of play and trying to make a go of it themselves. Obviously, as you've just seen from something like Galileo, it does a very specific thing. And it does a very specific thing for a very specific audience, which is like technology companies or other types of company that are trying to sort of integrate these services into their product stack. Stripe's Treasury announcement, which came very, very recently, is essentially a partnership where Stripe is providing access to banking services to platforms, which can then offer that to their customers. So what they're able to do is when a user signs up for something like Shopify, they'll be able to get a bank account pretty much as soon as they open their bank account. So the really interesting thing there is a lot of people, small and medium-sized kind of businesses that are looking to just throw up a business and test out if they can sell stuff, will be able to very quickly get a bank account. I guess one of the pain points there being you don't always want to go and get a bank account if you're sort of like just trying something out. So it's a really hard thing for people to wrap their head around. This makes it a lot easier.
And would you say that it's banking as a service as we know it currently, or just an abstraction of that?
I think it's an abstraction. So that the idea being that that Stripe are very good at being a presentation layer on top of banking infrastructure and then surfacing that for other companies. But what Stripe doesn't do in this instance, it has partnerships with a load of American banks, by the way, so they can sort of like provide bank accounts via that. But what banking as a service does really well is it kind of gets to the metal, like, or to the core of what the systems are that need to be improved within a bank, and actually help to solve those problems by, improving the way, as we've seen with Galileo, improving access to card issuing. That's no longer something that needs to be done by a team of 5 people. You can reduce your headcount down to a piece of software doing that work for you. Same with with Onfido doing KYC. You don't have to do as many compliance checks, for example. They'll have an algorithm to do that kind of work for you. So there's no suggestion that Stripe is going to do that work. It's just a presentation layer on top, which serves a very kind of simple or limited number of products.
And unlike Wirecard, they're not just serving fintechs here, are they?
No, they're doing a lot more than that. This is like essentially what Wirecard did for fintech. Stripe is essentially doing for every small business. It's doing the same thing, whereby it's saying, in the same way that Wirecard said, you go and trying to get product market fit. That's all you need to worry about. Stripe says, all you need to worry about as a small business owner is going out and selling your wares. Go and figure out how you sell stuff. We'll handle all the banky stuff that you need to be compliant. Don't worry about that too much. So it kind of does the same thing in that sense, but it's slightly different in the way that it's going after individual people rather than technology companies.
Is it in any way linked to the kind of business lending we were talking about earlier?
Yes, because, and this is, I think, one of the really interesting trends for 2021 is what we were talking about at the top of the show was that the pandemic really exposed the failure of a lot of organizations to be able to get money to people when they needed it. So that was the big theme of the year was, as a bank and as a technology company, can you get capital to people who need it when they need it in order to keep their businesses afloat? So Patrick, the CEO of Stripe, put out a tweet a few days ago, essentially saying the biggest barrier to growth for most small businesses, which, as remember, is in most places around half of kind of gross profit in that country is small businesses. The biggest barrier to that kind of growth for those companies is actually having access to capital to get their business kind of started and going. So they've announced an initiative called Stripe Capital, which will essentially help small businesses get access to loans in the same way that those banks at the beginning of the year did. And that will allow them to kind of push on in the early stages and make sure that they're making the most of that really early period. So it kind of quite neatly ties together that Stripe are really interesting because they're not only looking at the future in terms of, their objective is to increase the kind of the GDP of the internet. They want to make sure that the internet is something which is far more profitable for people than it currently is. But they're learning from the lessons of this year as well. Like, they're very, like, those two brothers, Patrick and John Collison, are really astute observers of the world. They know that the big problems are around capital, about access to funds, and they're going after solving those big problems. So definitely the most interesting product company out there right now.
Absolutely, and certainly making some quite justified waves at the moment. So
I guess that's the end of this Christmas episode and roundup show of Homescreen. Thank you so much to everyone who's come on the show this year. Joe and I have interviewed some amazing people from some really amazing companies, and they've talked to us about how they're building stuff. So we wanted to thank those people, and also thank you for tuning in and learning a little bit about how you've been making use of the show. It's been great to hear about how you've all found companies and how you've been kind of valuing, discovering what those companies do. So thanks for that. If you want to find out a little bit more about the product that underlies this show, head over to pulse.11fs.com. And if you kind of want to see a little bit more about how we do the research that gets onto the screen here, then that's the place to do that. But thank you very much and have a great 2021.
Thanks everyone. Happy Christmas.